Good morning and thanks for watching Market Day Report. I'm Christina Loren. While in office, President Donald Trump has withdrawn the U.S. from TPP, placed a freeze on pending regulations, and has plans to renegotiate NAFTA, leaving many to wonder what to expect next moving forward into 2017. Joining us on set to discuss ag and tax policy under the Trump administration is Kansas Farm Bureau Professor of Agricultural Law and Taxation at the Washburn University School of Law, Roger McEowen, and Allen Featherston, Department Chair of Ag Econ at Kansas State University. Thank you so much for joining us, gentlemen. And let's get right to it. Trump's tax policy will likely be substantially different from the past 8 years in many areas, specifically Obamacare. What changes do you see there?
I think that's a given, Christina. And this really, his policy follows up on what the House Ways and Means Committee proposed last summer. And it involves a number of things. And first, with respect to the health care law, Obamacare, that law it's basically a tax law. And I'm not sure that many people realize that, but it was designed as a redistribution of income couched in terms of health policy. I think we will see the elimination of the passive investment income tax, which is the additional 3.8% tax on passive sources of income once you get above a certain threshold of income. Mm-hmm. I think we'll see the elimination of the additional wage tax that was included in the healthcare law. I think we will also see elimination of various other taxes that are in there too, such as the one on medical devices. That one is pretty well known. The tanning tax will probably go away, and a whole assortment of taxes and penalties that are included in there. And in fact, he's already taken action with respect to an executive order, which is a very unique executive order, telling the agencies that have discretion under the health care law to exercise that discretion in favor of individuals and against the government. I've never seen an executive order like that before. And so that addresses the penalty issue, particularly with respect to the individual and employer mandates.
Now, if these taxes essentially go away, that would free up some funding for consumers to purchase more American-made goods, you know, agricultural goods. What do you say? What do you have to say about that?
No, certainly in terms of with reduction in taxes, that would certainly increase the ability to purchase and consume type items. Also, for example, it probably would redo the way health insurance is and may give consumers more of an option with regards to how the plans are. And that's certainly important for self-employed individuals that do struggle with the current system.
Yeah, it's been tough for a lot of our farmers and ranchers as well. Now let's talk about the future of the federal estate tax. What would you say about that, Alan? And then we'll come to you, Roger.
In terms of, certainly that's one of the issues that's been a big concern in farm country, and there's many things from a technical standpoint that Roger can talk about with regards to maybe changing that.
Yeah, I think the stars have probably aligned politically now that this is the best chance we've seen for a long time to have that tax eliminated. The question that farmers are going to have, however, is what happens with income tax basis? Will we still get a stepped-up basis on assets that are included in the decedent's estate? And if estate tax is eliminated, that's going to be the major question, because the federal estate tax actually doesn't apply to that many farms and ranches. Less than about 0.5% actually end up paying federal estate tax. However, income tax basis applies to everybody. So if the tax is eliminated and we retain stepped-up basis under the Internal Revenue Code, that would be a win-win for agriculture. So we'll have to wait to see what their mechanism is for repealing it.
Oh, I think you just brought some optimism for a lot of our farmers and ranchers listening right now who may not be as well versed with the law as you are. We really appreciate your expertise. Now let's talk about the impact of the future of agricultural policy under the Trump administration.
Yeah, certainly the new Farm Bill is coming up for discussion. Yeah. In fact, they're going to have some hearings in Manhattan, Kansas in the end of February. But generally, I think people are pretty pleased with how the Farm Bill is working. I think there will probably be another decision point and maybe multiple decision points in terms of whether or not you would go from the PLC, ARC. But in general, I would not expect major changes in the Farm Bill.
Okay. What about trade?
Well, trade, this president likes bilateral trade agreements much more than multinational trade agreements, and we've seen that already with the pullout of TPP. And I know Ag is concerned about that, but I think there are greater issues inside the TPP that caused concern that Ag really wasn't focusing on. And I think Allen would probably echo the thought that, yeah, Ag does benefit from trade, and the fact that we're removing ourselves from TPP doesn't mean that we're not interested in trade. It just means that this president wants to do a different type of deal, and agriculture may actually come out better. And it's too early to tell with respect to that, but it's easier to do deals one-on-one with countries than get into these very large agreements that have other things in there besides just the agricultural angle that we don't really see, that may not be in our best interest.
It's really interesting that you bring that up, because I do think that a lot of farmers and ranchers out there are a little bit on edge. They don't know what's to come now that President Trump has officially backed out of TPP. But you say these bilateral agreements could actually benefit us even more potentially.
Yeah, one of the things that really concerned me about TPP was it sets up these what I would deem to be unaccountable tribunals that you cannot appeal their decisions, and they're making decisions that will bind the United States, and those are decisions that are not made by our elected representatives. That type of giving up of our sovereignty, those things bother me. Maybe it's not something I should be worried about, but it's more than just the Ag angle that was in TPP. And you know, I'm encouraged by the effort to try to do deals one-on-one with countries, but we'll have to see what happens.
And as an esteemed economics professor, Allen, what do you tell your students who may be getting involved into the ag industry about the farm economy going forward?
Certainly, I think the farm economy going forward is very positive. Again, the long-term trends have not changed with regards to growing population. They will have to feed 2 billion more people on this planet than are currently there. I think the other thing regarding that, though, is if you really look at where those people will be located, it's going to be in Asia and it's going to be in Africa. And if you look at their productive capabilities in terms of food production, it's just not there. And so essentially, long-term trade is very positive, simply because they're going to have to get their food from other parts of the world. And the big thing with regards to trade is just making sure the demand is there, and I think the demand will be there. And so I do think while we're in a downturn right now, the long-term prospects for the sector are very good.
That's wonderful to hear. Thank you so much for your expertise, both of you. We really appreciate your time. Roger McEowen with Washburn University School of Law and Allen Featherston with Kansas State University. Thanks for joining us and for helping us wrap our brain around some of these very difficult policies and what's going on right now when it comes to U.S. agriculture. Stay with us. Meteorologist Tim Ross has your forecast coming up at 10 after the hour.